Joining me now, Arete Research senior analyst Richard Kramer and Granite Investment Advisors Tim Lesko as well. A panel here to talk about Sundar Pichai and the future of Alphabet/Google. And perhaps, Tim, we'll start with you first. You're an owner of these shares. You're an owner of this stock in the company. Are you happy with this new CEO?
Well, certainly we're happy to see the peaceful transition of power at Alphabet/Google. It's been a confusing stock for a long time because they've had these core businesses that generate most of the cash flow and then all of these other bets. We're very happy to see them move to an operator. When big companies like this move from founders to salesmen, perhaps in the case of Microsoft moving to Steve Ballmer, or way back when Apple moved to John Sculley, they were unsuccessful transitions. So we're pretty happy about this choice.
All right, they're pretty happy. So Richard, it is not like Sundar Pichai comes in. First of all, he's the insider, and the stock reaction may indicate that the investors should be happy with this move because it was largely expected. Sundar Pichai was seen as the man who was going to take over eventually. The timing was up in the air, but now we know that timing is definitive. Tell us a little bit about what you think Sundar Pichai is walking into as now the head of Alphabet overall. What kinds of challenges and what kinds of successes can he look forward to in the coming months?
Well, I have to agree with Tim, and I don't think much changes here. I think Sundar has got to tiptoe through a minefield of regulatory investigations, not just in the U.S., but in the EU and in other countries. And he's got to figure out a way to placate some unhappy employees, which may have differences of opinion about the way in which the company is being run. That said, the company has $117 billion of cash. On our numbers, it should generate $37 billion of free cash flow next year. So he has tremendous resources. Unfortunately, he can't really use them because for fear of regulatory oversight or review, they're precluded from doing any large-scale M&A. They really don't have many places to move that wouldn't already be contested terrain.
So Richard, that sounds kind of like you're saying that it's almost like Alphabet/Google cannot get bigger because the government won't let it. I mean, so does this mean now that this is in essence, a large utility company and that the growth here is pretty much just going to be focused on growing the return of cash to shareholders at some point? Is this a stock that's still a growth mechanism, Richard?
Well, it is still a growth mechanism in the sense that they still find ways to add 20% to their top line as they've done for the last 5 years. And they're certainly on the cusp of looking at areas like cloud computing, which are material new segments for them to get into. They've made a big investment in hardware. Whether or not that turns into the kind of returns that Apple sees from hardware, let's see. And they have a tremendous amount of option value in the $25 billion of R&D that they're doing every year, turning AI or data science into a service for corporate clients. So those are all terrific growth opportunities. But in terms of addressing large adjacent markets via M&A, that certainly is not on the table when they're under the regulatory microscope the way they are.
All right, so Tim, with those thoughts and with those particular constructs and confines, you're a portfolio manager, you allocate capital for these things. Is Alphabet a company, given the regime change with Sundar Pichai, that is an overweight, an underweight, or a market weight in your portfolios, given your exposure to tech and communication services companies?
Well, so over the past few years, it's been an underweight because we think there's been a lot of confusion. Management changes like this, where you put Sundar in charge of all of the umbrella of Alphabet, may lead to more focus from the company, which we would really like to see. And as the other guest mentioned, so much cash on the balance sheet that perhaps they can focus on the businesses that generate cash and get rid of some of the businesses that don't. It's a sum of the parts story that we think is a lot more valuable on the parts that make money.
All right, Tim Lesko and Richard Kramer, thank you very much to both of you guys for your thoughts on Alphabet/Google and Sundar Pichai.